Crypto Currently podcast. Happy New Year to everybody. January 1st. Big things for Bitcoin over the next 2 months. Not a big fan of trading Bitcoin. I think that the play on Bitcoin is to buy and hold for 4 years, 2022. And I can get into why, but most of you should probably already know why. 2022. So there's some things I'm looking at on Bitcoin as a short-term trade, if that's your thing. If you like to make 10 to 30 50% gains and then pull out and look for other strategies and other things to put your money into, then this is what this particular broadcast is about. Couple of things coming up in Bitcoin that I think that you could do pretty well on short term. 30%, 50%, that's a huge return on your money short term. There's a lot of people that are getting addicted to these 1,000 and 2,000 times returns on their money. That's not realistic. It's good if it happens to you, and it will most likely happen to you again if you're trading these things, but good strategy doesn't seek to get those kind of gains on everything that they do. So, Bitcoin short term. Let's have a look at a couple things. If you go on to the charts for Bitcoin, you will notice that there was a big rush on Bitcoin in early December. Now, what caused that? What happened? Well, futures. Futures contracts were offered by the Chicago Board of Exchange and then followed up by the Chicago Mercantile Exchange. And that was big. That's a big validating move for Bitcoin. I don't know how much money came into it. The numbers on open interest were relatively low, but either way, that's what happened. Big run on it, and then there was a big sell-off. Right? The peak there on Bitcoin, the peak was December 8th. It peaked out at 18,275, and then it sold off and dropped down to a low at that time of 13,226. Not terribly lower than where it is right now, but then it climbed back up and it hit an all-time high, 19,864. So let's just call it 20,000. Then there was another huge sell-off, all the way down to 12,238 was the new low, and right now it's sitting around 13,784. Let me refresh that. 13,833. Beg your pardon. And this is the. Here we go. So going forward, what's going to happen, right? There's three major things that are about to happen in Bitcoin that are going to add some volatility. Now, volatility is your friend. Volatility is what pays you when you're speculating. Three major things. Number one, this is probably the most boring, but you better keep your eye on it. So the new tax bill, Donald Trump signed in a new tax bill, and included in that bill was mentions of cryptocurrency. All right, America's the greatest country on earth. All right, you can do pretty much whatever you want to do as long as you pay the tax man. Right, that's why we have an entire federal department of alcohol, tobacco, and firearms. Alcohol, tobacco, guns. Right, in one department. You can sell cigarettes, you can sell alcohol, and you can sell guns. You just better make sure you pay the man. So the IRS is a little bit freaked out right now because they don't really know how to track it. They don't know how to track cryptocurrencies. They don't know who's making what or where it is, and they don't like that because that means that there's shenanigans going on. People are gaming the system and not paying their taxes. All they want is their money. And in a knee-jerk reaction, we have this new problem where the tax scenario is a little bit unfair. And it's unfair because the taxes that are being applied to cryptocurrencies are apparently they're not being taxed the same way in other currency trades. Like if you're trading futures and options on the Japanese yen, then the taxes are going to work a little bit differently for you, and that's not fair. So we're probably going to see a lot of lawyering. Anybody who's a whale in this market, and I'm talking, the hundreds of millions to the billion-dollar players in these markets, those people are going to be hiring lawyers and trying to get this sorted out. It's not malicious on the part of the IRS or the federal government. Cryptocurrencies are new, Bitcoin is new, and the IRS doesn't know what to do about it. That's fair, all right? And hopefully this will be sorted out before tax time in 2019. But anyways, going back, that's going to play a big factor on how people trade, right? If you're going to be taxed and nickeled and dimed every time you move your money in or out of Bitcoin or in or out of other cryptocurrencies, if you're going to get taxed as income and taxed as capital gains on every single trade, even if you're trading coin for coin, which is a whole other concept, if you're going to be taxed for that, well, that's going to cause people to not want to trade them. Or another way of saying that is to pull their money out of that market altogether. That could be one consequence. So we're going to see how that plays out. So that's number one, the new tax law. It's talking about taxes is boring, I know, but it's certainly a factor. All right. Now, number two, the contract expiration on Bitcoin on the CBOE and on the CME is January 17th. All right, that's right smack dab in the middle of the month. So all those people who bought futures contracts on cryptocurrencies, that they're going to have to do whatever they said they were going to do on January 17th or before. January 17th is when those contracts come due. So if they bought Bitcoin, they're going to have to sell it. And if they sold Bitcoin, they're going to have to buy it. All right? And there was less than 600 what are called open interests. I don't know how much was put on selling it and how much was put on buying it, but that's how much open interest there is. That's how many contracts that are out there in the Bitcoin futures market. So January 17th is going to be a big day because, number one, it's the first time in Bitcoin's history as far as the futures market are concerned, and we're going to see what happens. Could be a huge sell-off, could be a huge buy-in. But either way, it's a big day. Now, the third thing, and you forgive me if this takes a while to explain, but the third thing is Christmas, all right? One of the main things that I really don't like about Bitcoin futures is when it was introduced. The first week of December, that's, you're going into December. What is it? A third of the human population follows Jesus. Right? It's Jesus' birthday. So, it's a big spending month. People buy gifts. People spend cash. They spend their disposable income. And we've gotten so accustomed to credit that we don't really even spend that. We spend money that we think we're going to make in the future by using a credit card. All right. Now, the bills for Christmas, Visa, MasterCard, they typically send out their bills on the 15th of every month. Right. They send out and tell you when your bill is due. That happens to be the Monday prior to July 17th. July 17th is a Wednesday. 2 days before that is Martin Luther King Day. I believe that's a banking holiday, but that's when the Christmas bills show up. The reason I bring that up is because in other commodity markets, futures and options, that's typically the reason why you see February gold jump up. Not every year, but most years. You'll see a dip in the stock market and a run on gold. And the reason why that is because the real investors, not speculators like you and me, but investors, they'll take their money out of the stock market and they'll put it in a safe haven like precious metals, gold, for example. They'll either buy the gold physical, they'll go into the gold futures and options, or they'll put their money in companies that have to do with gold, like gold mining and that sort of thing. That typically happens because of Christmas. Now, how is this going to affect Bitcoin this year? Nobody knows because it's never happened before. So, yeah, you could be saying, well, it might not affect it at all. Well, here's one thing about this particular Christmas. All right, anytime the United States gets a brand new president, the dollar tends to dip. All right, we have a new president, and the numbers are in. Okay, this is not speculation at this point. The Christmas numbers are stronger than they've been in a very long time. All right, people spent a lot of money, so that means there is consumer confidence in the market. Now, this is good. This is good for Bitcoin on the upside. When people are confident to spend money, it's one of the aspects of what's called the wealth effect. The wealth effect. People are confident and they're spending money, and they spend a lot of money on Christmas. That means there's going to be big bills coming up in January. People are going to get their credit cards, and we're going to see how this plays out in the cryptocurrency market. Personally, I think it's going to play out to the upside because there's still the underlying consumer confidence that's in there. So people that are knowledgeable enough to do everything you have to do to buy Bitcoin or altcoins, those people, the American ones, those people are confident. I think that that'll play out to the upside in Bitcoin. So 3 things. The new IRS tax code. You've got the January 17th, red letter day for futures on Bitcoin. And you've got the Christmas bills showing up and how that's going to affect these markets in that same week in January. So I think that if you were looking for a short-term trade where you just, could make 30 to 50%, maybe even just like 10%, but either way, pretty good run. I think a buy and hold till the end of February strategy, and if it doesn't work out, if Bitcoin completely craps the bed, then hold on for 4 more years. But I'm liking it. I like the volatility. I like the consumer confidence numbers. The IRS thing is, that's going to have to be sorted out. But in the meantime, those things are looking good. And I have some other coins to talk to you about that I'm very excited about for 2018, and we will talk about those as the year progresses. Have a good one.